All right, everybody, it's time for questions that you have, and you have mic runners. I'll start over here. And sorry, we can't see all of you really well, so we have shining lights in our eyes, so raise your hands high.
So the question is, it looks like QuickBooks Enterprise is really the Enterprise Suite is a really special product, and AI is playing a kind of leading role in driving this adoption and penetration.
Got it. So the question is, and by the way, we'll team up up here on all the questions. So the question is, what gives us the right to win in mid-market? And what's our view of the impact of AI when it comes to just our overall tax platform? So I'll start with on the mid-market front. You know, first and foremost, out of our 180 billion in TAM, you saw that about 90 billion of the total addressable market is mid-market. And by the way, we have about 800,000 of these customers that are already in our base that have all the characteristics of a mid-market company and are actually seeking a lot of the solutions that you heard us talk about here and you saw in the immersion experience. Really, our right to win comes down to three big things. One is about the experience. Now, this is an important element because we don't actually have to be at parity. In fact, most of the alternatives that are out there for mid-market companies, they well overserve them. They are large ERPs for the context of what these mid-market customers need. And so one, we went on experience, which means ease of use. I mean, as you saw up there, and those of you that are tied in virtually, you saw the experience. It's drop dead easy, and it's core to what we are fundamentally great at. So it's experience to drive your revenue and profitability growth as a business. That's one area where we have marked advantage. The second is price. The price that we offer, when you look at the ARPC that you heard from us, that $20,000, although it's early and we believe we have a lot of opportunity, is actually everything. It's payments, it's payroll, Mailchimp capabilities, the whole financial management platform. So we win on price. In most cases, I would be clear, we're not actually competing with anyone. Because when it comes to experience, when it comes to price, it's unmatched. The last one, which we don't often talk about, which is a really big driver, is the total cost of ownership. For businesses, generally could take up to 2 years to actually switch from the platform that they use to the alternatives that are out there. And that's a massive burden on a mid-market business. It's a massive burden on a company like us when we upgrade our ERP, much less a smaller business. So those are the three big areas of differentiation. It's experience, it's price, and it's the total cost of ownership. And I'll just remind us that all of this sits on a data and AI platform where a lot of the automation and done for you is part of the ease of the experience that is really unmatched.
The one thing I would add, in addition to what Sasan shared, is when you're selling to a consumer or the small businesses, it's all about getting that product and the customer funnel flywheel going. When you're selling to mid-market, it's about using sales to drive discoverability. You actually have to go and make sure they understand what you have, why it's the right offering for you. That's an area that we're also building capabilities that we did not have in this company before. To Alex, address your question, what also gives us the right to win is this new capability and the new talent we're bringing in to build this capability at scale.
And if I go to the second part of your question, it was about tax. If you think about the $40 billion of total addressable market in tax, $5 billion of it is do-it-yourself, where we have over 80% dollar share, and really the $35 billion where it's a massive opportunity. If you look at the market structure of that $35 billion in TAM, it's very disaggregated. Our biggest competitors are a lot of firms and mom and pop shops. It's extremely manual, and it lacks price transparency. And so the real opportunity for us is all the investments that we've made around data and AI and the virtual expert platform that actually allows us to also, particularly in the assisted segment, win on price, win on experience. And experience is matching you to an expert that is perfect for you and matches your situation and can get your business and consumer taxes done virtually and at a disruptive price. One of the things that we talked about in the last year, and you're going to see us in terms of just our overall commercialization and marketing approach this year, is we are going to be very aggressive going after price and the lack of transparency in price and the alternative. And so and that's all data, AI, it's the scale in which we have. Please. And then Keith, I'll come back to you.
Siti Panigrai from Mizuho. Just drilling into that comment on Intuit Enterprise Suite, one on products and on the go-to-market side. So is the product basically a combination of all the QuickBooks and payroll payments that you had putting into the suite, or you really expanding the features to cater to the complex needs of those 200, 300 employee segment, and how should we think about the roadmap to cater to that? And second, on the go-to-market side, certainly it's a different sales motion than what you have been doing before in the small business side. So help us understand a little bit what you are doing in terms of hiring sales reps, and when will they be ramped and to be material contributor to the revenue?
Maybe I'll start with the product and you take the go-to-market.
Yep.
So let me start, I love your question. Let me start with what Intuit Enterprise Suite is not. It is not just stitching together all of the products that we have. We have done that for the smaller businesses, but Intuit Enterprise Suite is really the innovation that we've driven to be able to provide all of the needs that these mid-market businesses have that we have, starting with, I need to be able to see how each of my entities are performing. I need to be able to pull together the entities to have consolidated reporting. I need to be able to understand multi-currency. I need to be able to understand, if I'm a construction company, the KPIs that are right for me, which is like, what's my cost versus profitability based on what I estimated for a residential or commercial site. And so when you look at Enterprise Suite, it's the combination of what we've built out on our financial management platform. It's the capabilities that we've built across our AR and AP, all of our bill pay and payments capability to be able to deliver at this scale, and then our workforce solutions. So all of it has been really built for mid-market companies, and what you saw up there is, and they're stitched together. That's really the power of our platform, which is, I mean, you saw in the demo that by a customer using all of our capabilities, it goes right after their bottom line. We can fundamentally drive their revenue growth and profitability growth by all the capabilities being in one place. And lastly, to answer your question around just the platform, as you heard Laurent talk about, we have a very aggressive roadmap. We are very clear the segments that we've started with, which by the way has been years in the working. Construction, professional services, and nonprofit. Although we've had other segments, by the way, in our initial customers that have come in and are on the suite. And then we have a very clear plan of creating credible promoters that are telling everybody, because everybody will flock in those segments. And then we have a very clear roadmap of which segments are next. And we are throwing a lot of our engineers at this because the opportunity is massive. So that's the approach we're taking on the product side. It's more than just stitching, it's the roadmap.
And on the go-to-market side, Siti, we are being very deliberate about building out the sales capabilities. We are hiring business development reps, we are hiring account managers, but what I also want to underpin is it's not just a net increase. We're also looking at, if the smallest of the small business should really be a flywheel similar to consumer, how can we actually reduce some of the sales there and reshift, like the new talent, but like reshifting of those capabilities. And this has a sales cycle to it, as you can imagine, but the sales cycle isn't like the enterprise sales cycle. You might be thinking of this sales cycles in weeks to months. So we expect IES to be contributing to the business in the coming quarters.
Keith Weiss from Morgan Stanley. Thank you for hosting today. A lot of great information. The demos are really super cool, actually. A question I had is digging into big bet number 2, connecting people to experts. And I think a bigger picture a lot of investors have is, are those experts going to continue to be people on the other side of the equation, or are they going to become a virtual tax expert or a virtual payroll expert? So one, what's your view on that? Like, is this going to go to a point of where the people aren't really needed on the other side of the equation? And if so, are you still going to be able to monetize this effectively? Like on the tax side, will you be able to charge $90 for TurboTax Live if it's not a person, it's a large language model on the other side of that interaction?
Yeah, I love your question. So just, it's really important to just start with the market structure, which is we're in essence competing with a lot of mom and pop shops, some smaller firms, lack of price transparency. Everything is very manual and it takes weeks on. When we declared this bet 5 years ago, our bets are very much interrelated. The whole focus of the bet was it's all about data and AI. And we started building out AI agents that can actually do a lot of the automation and the work for our experts. And by the way, this is the case across our entire platform, inclusive of the business side. Right now, a lot, if I look at where we are today versus 2-3 years ago, a lot of the work that our experts were doing was manual, gathering the data. Even when we had the data, how it, in essence, was digested into the platform, a lot of it they still had to do manual work to be able to understand and capture all of their engagement with customers. A lot of that was manual. So a lot of what you're seeing in terms of the progression is a lot of the AI agents are actually doing the work, getting the data, the platform digesting the data, guiding the expert in terms of what questions to ask. That is actually giving us a lot more leverage in terms of what then the human experts, which sit on the AI platform, can do. We view, at least in the next 5 to 7 years, that human-powered experts that sit on our AI platform will actually be even far more relevant, but spend a lot less time doing manual work and a lot more time just doing the final tax return, the final bookkeeping, the final accounting, and providing advice with the customer. If you think about what Alex showed earlier, we believe, based on where we started 5 years ago, the future is AI agents that are doing all the work, plus AI-powered human experts that are doing the work. Last thing, the reason I started with the market structure is the pricing of the market structure is such that we are today in the assisted segment, in many cases, probably 20 to 30% of what is actually being charged. And so when you think about the opportunity to be disruptive in price and the ARPC uplift, it's significant. But we believe very strongly, based on everything that we're seeing, that human-powered and AI agents are both going to be critical to the future. That actually gives us not just pricing leverage, but actually gives us platform leverage, because ultimately we can deliver the work at a lot less cost and higher margins. I don't know if you would add anything to that.
Thanks, Sasan. Keith, one thing that I think is misunderstood in the premise of the question is that we're assuming a static marketplace. We're very much assuming a dynamic marketplace. If there's a range of tax returns, and currently with the right unit economics, we could address this much, continue to lean AI, we continue to expand the ability of taxes we can address, still at a solid unit economics. So that's a key component to keep in mind on what AI also unlocks for us going forward.
Please.
Thanks very much. Brad Zelnick with Deutsche Bank, and thanks for a great day. It always lives up to the expectations all year. Sasan, you talked about driving velocity, which is near and dear to everybody in this room. And you talked about it in the context of culture. When I think about Intuit's culture, I think about Scott Cook's customer obsession and following the customer home. I think about Bill Campbell and his ability to just drive the absolute best out of organizations and get teams performing, at peak levels. The culture has always been very defining for Intuit. How in an age where AI is so important, where Intuit is moving up market, do you still preserve that culture, use it, evolve upon it to drive your success going forward? Thank you.
Yeah, I love your question. First of all, our philosophy around culture is if you don't evolve who you need to be, you become extinct. And one of the things I talked about earlier in the day when we refreshed our values, there are two things about this company that were true 40 years ago, and I think they'll be true 40 years from now. We're all about people and performance, and we're all about customers. Those two things about the company will not change. But what we've been very intentional about changing in our culture is really three big things. One, being far more courageous in terms of being bold about where we want to be in the future and taking risks, educated risks in terms of the big steps that we take to create a different future for our customers. Part of that also, right, entails in making a huge bet on AI. 5 years ago, when we were standing in this room, when it wasn't the most popular thing to talk about, and that's positioned us for where we are today. The second is just being obsessed with our customers. There's a evolution that we're going through as a company. It's different being customer-centric versus obsessed with customers, and that's where velocity comes into play. And if you think about where we were as a tax and accounting platform 5 years ago and where we are today, that's been a massive cultural evolution. And I'll just end with the following, which is just an indication of how much we focus on our people and our culture to drive the strategic transformation. We just had our Intuit Leadership Conference, I think it was about 3 weeks ago, with our top leaders of the company. And we focused on 3 areas: mid-market, money, and fundamentally getting a lot better at sort of growth hacking and funnel management. And the biggest thing that we talked about is why those are significant cultural changes. We've been a company that's focused on building accounting and tax workflows versus, well, everything in tax is about money. Everything a small business cares about is about money. And our focus around money, you see it in context of payments, you see it in context of payroll, is actually a massive cultural change for us. To win as a mid-market, our view is this is a $90 billion TAM. It's material to our growth today, but we haven't even scratched the surface. 10% of a $90 billion TAM, which we believe that's just a starting point, that's bigger than the small business group is today. But that's a cultural change because it's not just about build a do-it-yourself platform and market to masses. It's actually about all the things you heard Sandeep talk about in terms of go-to-market. It's a long way to answer your question. We are very intentional about culture, about growing our teams, about the teams that we bring in, and being very clear about who we need to become and where we want to preserve who we are, but also what has to change around who we are. And we have metrics where we measure very intentionally our progress. So we have to evolve. Every company has to evolve culturally because culture is never static. If you remain static, you become extinct. Yes, and then we'll come back to you. Can you raise your hands if you have questions? Okay, gives us a view of the landscape. Please.
Thank you very much. Mark Murphy with JP Morgan. Just your messaging seems to be focusing much more on carrying an advantage, carrying momentum, the position of strength. I don't think you've mentioned anything around macro weakness. I don't think you've mentioned student debt, credit scores, small business cash balances. And so it's leading me to wonder, is there a year-over-year change in the environment that is kind of driving this difference? Or has the Fed's rate cut driven some kind of a change in your dashboard? Are there more green lights in your dashboard? Or is the expectation of these ongoing rate cuts kind of getting into the psychology of small businesses?
Yeah, I'll share 2 perspectives, and again, I'll team up with Sandeep on this. The first thing I would say is we've learned to live in a world of headwinds. As we think about the last several years, the macro environment has certainly played, it's been a headwind for us. Really, our tailwind has been our execution. It's been winning as a platform. And the example that I think we've used multiple times on earnings is, our payments volume, just payments alone, not our overall money portfolio, 3-4 years ago was growing, in the mid to high 30s, and it, declined 10 to 15 points, and that's because consumers were spending less money. That's just an illustrative example. We've experienced, the macro impact of Credit Karma, which is 10% of the company, but nevertheless, it works against us. So the first point is we've learned to live and grow and execute in this macro environment. And that's our expectation going forward. Now, the second point I would make is, a lower interest environment is only going to help consumers and will only help businesses. And so we would expect over time that will actually turn into a tailwind for our business, but it's not an assumption that we've made. And we didn't talk about it because as we shared everything that we shared today, as we think about our guidance, it's not at all based on any macro environment change.
Sasan, you're the only $16 billion company that hasn't breached 10% of revenue from international. I know you're
18 billion. Don't take 2 billion away from me.
on approach. So when you think about it, in the past years, you've given out explicit slides, here's where we're going. I know last year you said it's not really maybe part of the near term, but we need it for the long term. How do you think about this? And the question is in context of many investors are concerned you're going to the mid-market because the SMB segment's out of runway. So some ask, why not just run an international playbook in your lane that you're good at versus running the playbook upstream and forgetting about international? And maybe you're not doing that, but if you can just clarify that.
Yeah, sure. Again, Sandeep,
I'll add after you.
let's team up on this. First of all, I'll just start again with when you look at the total addressable market for the business group, since that was the essence of your question, it's about $180 billion in TAM. This is total addressable market for us. And we're 20% penetrated in terms of the actual customers in that market. And when you look at our growth thesis, which by the way is what we declared 5 years ago, this is what you're seeing from us is progression. There is no shift in direction. You're seeing an acceleration because we're executing on our strategy and we're conveying to you based on that progression, where we are focused. And so therefore, we have a massive opportunity with services, which you heard Mariana and Sandeep touch on. When we look at the solopreneur market and the small business market, which is 90 of that $180 billion market, we have an incredible opportunity to accelerate focusing on penetration of getting our customers to use payments, payroll, bill pay, our live platform. And that's what's accelerating our growth in the business sector. And that's all because now we actually have a platform that we didn't 3-4 years ago, where in one place you can run your entire business and really go after your growth and profitability. And that gives us a lot of leverage with customers because not only are we helping them with revenue and profitability growth, but it actually gives us a lot of pricing power because we're actually less in total cost for them than all the disaggregated apps that they had that didn't talk to each other and they never used. And we have an incredible opportunity with solopreneur and the small business market to accelerate the penetration of not only customer growth, but services. By the way, I would also remind you, when we have a payroll customer and we add payments, we don't count that as a new customer, but it's services revenue. So we're very focused on customer penetration and growth. Last but not least, when it comes to mid-market, I know sometimes that may be seen as it's a new category for us. These are customers we know. We've served them for years in the enterprise sector with our desktop enterprise platform. We know these customers, we know their needs, we know how to serve these customers, and we have been building out the capability, both platform and commercialization and go-to-market in terms of being positioned for where we are now. So from a growth formula perspective, it's customer growth, it's critical, it's services growth, it's mid-market, and we just revamped in the last year international, which is how do we win in the countries where we have product market fit with the integrated QuickBooks Mailchimp platform, but also Mailchimp as the lead CRM tool for the rest of the world. And we hired some of the best talent. One, we got Greg Johnson back to the company, which we're delighted about. He's got incredible global experience, and he's hired an incredible leader that built a massive business in Meta internationally, and brings expertise to us that gets us excited. So those are the key areas of growth, and the way I would just have you all think about the progression of where we are, and now the acceleration of what's possible, because now we are a platform company.
What I would add is also keep in mind when you're an 18 billion plus company and committed to growing organic double-digit revenue growth, we don't have the luxury of just going after one or two vectors. International remains the focus. We're constructively dissatisfied with where we are, but we have made progress internationally. QB Advanced International is north of 60% growth. Our services internationally are growing faster than the US, particularly in Canada and UK. And now with the Mailchimp asset as a tip of the spear, we're confident that we will make even stronger progress internationally. But our commitment remains strong organic double-digit revenue growth. For that, international is going to play a role, but as is going into new markets and the services and the platform places I just talked about.
Keep your hands up so I can see you're up, but let me see. Okay.
Thanks so much, Kash Rangan with Goldman Sachs. Excellent analyst day. Small business is now a big business for Intuit. It's $10 billion plus, as you said. As you move up market, do you run into an issue where, say, in HCM, there is a specialist? Workday has created a big business. I'm not saying that you're going to compete with Workday, but as you move up market, the pockets of specialties become more concentrated. So there's an ERP mid-market company, there's a front office mid-market company, there's a payroll company, there's a payments company. These things become more specialized as you move up market. What gives you the confidence that based on the expertise that you have at the S level, that you can take that architecture, maybe your timing is right, that the market doesn't need multiple players, even in the medium-sized market. How confident are you that with the specialization that is required as you go up market, that you have and you will develop all those competencies? Thank you so much.
Yeah, I again, love the question. A couple of things I would say. First of all, our focus is not to serve enterprise. Like what you just described is very important if you're serving, a company the size of Intuit, or even a much smaller company relative to Intuit. That specialization of what's going to be our financial tools, what's going to be the tools that our developers use, what's going to be the tool that our sales and marketing folks will use, what's going to be the tools that our HR team uses. Those are very, at the end of the day, Alex, our CTO, is involved in those decisions, but those are also different decision makers that provide input into that decision. That is not how mid-market businesses operate. And remember, this is not a new category for us. We know these businesses. We've spent a lot of time with them. I personally spend time with them. And really, these are businesses that are looking to be able to operate their platform in one place. Very specifically, though, these larger businesses, what you heard Barry and Laurent talk about, where we have an incredible right to win, where we win on experience, price, and the lifetime sort of cost of our platform versus others, is financial management, payments, and payroll integrated. That's where we have the right to win. The larger these businesses get, they may look at, if there are 600-700 million, $1 billion in size, they may look at, and they do look at, what's my CRM going to be versus how I'm going to run my financial management, payroll, and payments. But we're not at that size. This $90 billion in total addressable market that we are pursuing, this is generally no more than sort of 250 to 300 in employees. And again, employees is not the only mile marker. It's actually the complexity of the business. So we actually feel very good that we have the wherewithal, the domain expertise. And I don't remember if Barry and Laurent talked about this, but beyond the account management team and the business development team that we've already built and are continuing to accelerate building, they also come with product specialists. So if somebody in one of the companies wants to deeply talk about payments and payroll, we have the specialists to engage them. But the key is that they actually see the value of everything being in one place. And they see the value of, if I have my payments, payroll, and financial management solutions in one place, I can actually drive revenue growth and profitability. And we're seeing that. We've seen that in the last 5 years, which is why we're progressively accelerating the investments that we've made. And I think what you're describing, just to close out the answer, is much, much bigger companies, which we're not serving today. Yes. And then I'll come back to you.
Oh, great. Thanks so much. Brad Stills from Bank of America. Thanks for hosting a great event here. Question goes back to a comment you made earlier, Sasan, where you said you started this AI investment 6 years ago, long before the advent of AI that we've all seen here. The question is, what were you up to back then? What were you doing with the platform with regards to data such that you're prepared for the opportunity today? And then second question would be, what's your view on kind of the shape of adoption here for some of these generative AI features like the invoice generator? We see this kind of gradual cycle within the big enterprise with AI. I'm just curious for your thoughts on how the SMB might behave differently in terms of the adoption cycle here with some of these generative AI features. Thank you.
The first question that you asked was your question, where were we 5 years ago when we made this choice?
Yeah, 6 years ago, what were some of the things you were doing in the platform to prepare yourself for the AI opportunity today, long before we were talking about AI 2 years ago?
Yeah, sure. Again, another great question. So where we were 5, 6 years ago, and just to be clear, there are many before us that brought the company to where we were, 6 years ago. But it's important to note that we were, 10, 15 years ago, right? We were mostly a desktop company. And what that means is, we had siloed code. Every segment had their own code. We were not a platform company. All of our data was siloed. Our data services were siloed. And when your infrastructure, your data, and your application layer code is all siloed, you can't actually create a platform. You can't actually create the leverage of what comes with technology, and particularly AI. So 6 years ago, when we declared that in order for us to fuel growth for the next 10 years, we have to become a platform company. And the reason why we will be able to drive undisputed benefits for our customers will be because of data and AI. That really forced us to look at all of our data silos and create a data platform and bring all of our data together, make sure all of our data is clean, make sure all of our data services, like categorization, as an example, which is all AI-driven, can actually be applied to the data. And now, this is back to your question of where we were, 5, 6 years ago. A lot of our innovation, forget about the future for a moment, a lot of our innovation today across what you saw with Intuit Enterprise Suite or the money innovation that you saw, our live platform and what's possible across tax and our business group is all of it is data and AI driven. It all sits on the platform. And so now, after sort of 5, 6 years of all of these investments, now we're actually positioned to win as a platform. In the last 5 years, we've worked on all the pieces and parts and putting it together, and you saw the metrics that demonstrate the proof points. Now it's about how do we win as a platform, as we look ahead. So that's a little bit of the from to of where we were versus where we are today, and then therefore what it means as we think about the next leg of growth. You want to take the next question?
Well, depends on
I'm going to put the pressure on him now. I think we'll go to that side of the room. Who has the mic?
There's a mic to your right, Sasan. Sorry, I snuck up on you.
He or she that has the mic has the mic.
Michael Turn with Wells Fargo. Thank you for making time and for great content this year as always. You've talked about platform multiple times, and we've seen diversification of the business in an uncertain environment. I'm wondering how you'd score your ability thus far to tie the Mailchimp and Credit Karma brands in underneath the overall Intuit umbrella, and how you're thinking about M&A as an opportunity to advance these big bets going forward. If AI changes the perspective there at all or not, would just be great to hear you talk on both those. Thanks.
For sure. So first of all, we spent a lot of time talking about data and AI, but if you just briefly reflect on what Alex walked through, there's a lot of investments that we've made in APIs, in services to just make everything modular so it can work together, along with the fact that our company sits on 2 very different clouds, external clouds. And I bring that up because that really has given us the fuel in terms of the integration of our platform services, and not just integration of acquisitions, by the way, to integrate payments, payroll, live, our accounting, all the integrations across. Now TurboTax is like one platform. Do it yourself, do it with me, we'll do it for you is all one platform. Those are all integrations. And so what Alex talked about this morning has actually been the fuel relative to what you saw in the immersion experience. And for those that were virtual, what you saw online. That's all because of all of our tech capabilities. And so this notion of TurboTax and Credit Karma being truly embedded, that's driving the growth we saw last year, but I think it's going to be even a more exciting story as we look ahead, is because of that integration. And I would say the same for Mailchimp. I would say overall in Mailchimp, we're about 3 to 4 quarters away from where we really want it to be. One, because we had to spend more time on the foundational things that we ever thought. By the way, that's the same as payments, as payroll over the years. And the foundational things are moving Mailchimp to AWS, being able to focus on first-time use, being able to build out some of the capabilities like reporting and visualization for businesses. But then the second is the integration across Mailchimp and QuickBooks. So all of our technology investments are actually have ignited what's now possible, and therefore why we're building velocity as we look ahead. Yes. And let's go to that side of the room, because I know you all have been raising your hands as well. And
That gentleman's been actually holding his hand up for a while. Let's go two clicks over. And then
Okay,
we'll go that side.
you're the boss, man. We'll go where you go.
All right, jumping in here. It's Scott Schneeberger from Oppenheimer. Thanks, guys. Great job today. Going to focus in on tax. In Mark's part, the lost 1.6 million lower income this year on experience versus value mismatch on the sizable price gap between free and deluxe. Just want to delve in here on one, with the DIY customer, what should we expect to see in the coming year? How are you going to attack that? You know, you mentioned fast money, we got that, but just add-ons, personalization. If you could elaborate a little bit on that. And then the second part of the question is, in the new 6 to 10 versus 8 to 12 for consumer, are we going to? It's always been skewed more towards price, but should we expect to see a bit of volume growth in the next couple of years? Thanks.
Sure. So let me start with what you heard from Mark earlier, because it's a very important premise to your question. DIY is $5 billion. The assisted category is $35 billion. And in the $5 billion and do-it-yourself category, we have well over 80% of the dollar share. So our strategic plan that you heard from Mark going forward is we're the category champions for do-it-yourself, and it's critical that we continue to not only maintain our dollar share, but where we have an opportunity to expand going beyond taxes, and of course, igniting in the assisted segment. To very specifically answer your question, in the do-it-yourself sector, what we actually saw that we liked is we're actually growing with high-income, more complex customers. And that's an area where we're going to rapidly accelerate in terms of how we target those customers and how we deliver for those customers, because we've been naturally growing with them. In the low end, simple filers, these are more lower income folks, out of that 1.6 million customers that we lost, there's a portion of it that we're comfortable with losing. And these are folks that we see that just jump between free platforms and just the LTV to CAC pursuing those customers doesn't make any sense for us. However, there is a portion that we're not comfortable losing. And these folks that we lost are, when you look at our lineup, we've had free, and then we have deluxe that's $100 plus. And we've really not been positioned well for some of these simple filers. And so what you're going to see from us this year is to ensure not only are we winning the simple filers that are lower income that we want to acquire on our platform and monetize beyond tax, by the way, which we have a lot of proof points around, but also accelerate our growth with the higher income, more complex customers, and of course, win in the assisted segment. So that's the approach that we are taking. And I would just say that what really matters is our customer growth and our revenue growth in assisted, while we really continue to remain the category champions within DIY. And I know I said that was the last, but the last comment is our growth actually came from mix and TurboTax Live, not price. And we're actually, we win on experience and we win on price. We're the lowest price provider in the assisted segment. So from just a mental model perspective, it's really been mix that's driven it and volume in the assisted segment.
The other thing to also keep in mind is, and it was a delightful insight that we learned, is that lower income, relatively lower income consumers, a large percentage of them go and get their taxes done in the assisted category, where they're going and dealing with someone who has opaque pricing, antiquated way of getting their taxes done, and they aren't necessarily walking away with that confidence. So I won't think about going after the simple filer and addressing the need just through DIY, because the runway there with north of 80% dollar share is somewhat limited. But we see meaningful runway also to get them on our TurboTax Live platform.
Wonderful. Thank you so much for taking my questions. Rishi Jaluria, RBC. Sandeep, I appreciate you saving from my arm from being perpetually raised. Maybe two quick questions on IES. First, you opened and talked about this 20K ARPC that you see with customers there. I know most of these are existing customers. What did that number look like beforehand? Because ultimately trying to get into what is an uplift for those customers as they on-ramp onto IES look like on an ARPC basis. And maybe if we think about the roadmap for IES, if you think about maybe new features or capabilities that certain customers may want, how do you think about your ability to organically build those out versus partner with other ISVs or maybe even dip your toes in the M&A waters? Thank you.
You take the ARPC, I'll take the product piece. Is that okay?
Sure, I'll add to the product piece too, depending which.
Well, no, you start first.
So a key thing to keep in mind on the IES side, you started with the ARPC upside, but let me just unpack the IRC opportunity, IES opportunity, pardon me, is at the core, there's the financial management solution, which is accounting. We are seeing customers who are on QuickBooks, on different parts of QuickBooks, some on advanced, some even on other SKUs, come onto IES. So we are seeing an uplift in ARPC. They're pure on a dollars to dollars basis. We aren't sharing that yet because so early. I don't want to put a number out there, and that becomes a watermark. Now, every time I'm explaining to you why that changed, but know that that's on our mind. In the coming due time, we will share that. But the bigger thing to keep in mind about IES is that these customers need to run a business. And they have a bunch of solutions that they're stitching together to run their business. And that's where we come in with the end-to-end platform, getting them on FMS. We are converting customers who are driving hundreds of thousands, some millions on volume into our payment solution. Where there's opportunity to get them to adopt our payroll. So that opportunity with Mailchimp. So that's the bigger opportunity beyond the focus on accounting ARPC uplift that truly excites us about the IES opportunity.
I should let him answer all the questions. Nothing to add.
Hi, Arvind from Rani, Piper Sandler. I had a question on Gen AI. I mean, you have talked a lot about it, but when you look at like a kind of taxes, IRS tax filing, it's very rules based, and kind of that's I mean, current state of Gen AI kind of lends itself to kind of rule based kind of solutions, and maybe not like in 24, but like even like 3 years out. Are you anxious that there'll be kind of more advanced improvements in Gen AI solutions, and then there's going to be like some private plays that doesn't completely displace you, but starts to kind of irritate you all from a market share perspective?
Yeah, thank you for your question. First of all, let me just be clear: we are the irritants. Our scale in investment in data, in AI, our virtual expert platform, our ability to be the lowest price provider disrupting and the assisted segment, we are so far ahead of anybody else, and we operate in a very paranoid fashion. We're never comfortable with where we are. And I say that not from a place of confidence, not from a place of certainty. From my perspective, the biggest thing we as a leadership team think about is how do we continue to architect our own velocity. We don't spend a lot of time looking in the mirror, looking at who's right behind us, because we started this journey 6 years ago. The second thing I would just say is the way we think about it, and the way we would want you all to think about it, is it's about our data platform and our AI platform. It's not actually just about Gen AI. In our world, accuracy, performance, and cost matters, and accuracy matters a lot. We can't sort of be right with taxes. We have to be exactly right. And therefore, our machine learning capabilities, our knowledge engineering, and Gen AI capabilities work very seamlessly together. Knowledge engineering is where we take rules and the relationship between rules and data and turn it into code. And that's an area where we actually have a patent, several patents, where that delivers the accuracy. Gen AI really bolsters what we're able to do, but the fundamental premise of what's really important when it comes to taxes is actually about the accuracy of it. And so we believe, as we look ahead, and when you think about what you heard from Alex, we believe all of our AI investments, and particularly in Gen AI, will just increase our speed and scale in terms of what's possible and how fast, by the way, we can turn rules into code and be able to scale it. So I don't know if you would add anything.
I would add, I think one part of your question's premise is right. The other part, I would help reshape it a bit. Where your premise is right is that, yes, when it comes to rules-based stuff, AI is pretty good. And that's why we're seeing all this improvement in our customer success. Because it's all rules-based, and if we need to escalate it, it could go to level 2, and we could basically use AI to do most of the level 1. But when it comes to taxes, you got to know what rules to apply to your situation. That's where all the attributes that our platform has become a competitive differentiator, become that durable advantage. You also need to address the need of fear and uncertainty. that you just can't use the rules. So that's also a critical component that I think when I get asked this question, folks are missing the second part of what do you apply the rules to, which we have an advantage in understanding.
I think we have time for one more question. I see a bunch of zeros here, so I think we're out of time, but maybe one more question? I don't know between the two of you who had their hands up more, so you decide between the two of you. How about that?
Or if they're quick questions, we'll take both.
Thanks. Arjun Bhatia with William Blair. Maybe to go back to the tax segment, can you just talk a little bit about how you think margins in that segment might evolve as you maybe become a little bit more aggressive on price with the DIY segment? And then going back to the question on the expert networks, how do you think the size of your expert network might change over time as you incorporate more AI into the platform?
Why don't I start if there's anything
Sure.
bad you go for it. So we feel confident about our margins. Keep in mind we manage margins at the company level, but I track unit economics across the business, so let me address your specific question on the tax business. The DIY margins are super strong, but I think the question behind your question is, how do you preserve and continue to scale your margins as you go into the services part and the TurboTax Live? This is where it comes down to two things. One is pricing the product right, which we can be disruptive and still price it right. But the second part is bringing down the customer service cost. And that's where AI is a massive advantage. By having most of our experts getting paid on a dollar basis, on an hourly basis, when we use AI to bring that preparation time down from hours to minutes, and in the demonstration Sarah talked about, in some of the areas we want to get these full service customers filings done in 30 minutes, that's where we continue to have the confidence that we can go into the services business and use AI to allow us to continue to get operating leverage and grow margins as we continue to grow the company.
The only thing I would add is, say do is everything. If you look at where we are today in our margin structure as a company versus 5 years ago, when we declared that really going after the assisted segment is important, and we built out our virtual expert platform, which is all sits on data and AI, and we, I think, shared at Investor Day last year that our variable margin on our live platform is actually higher than just software alone. So this is all based on data and AI, and it's the only way we can scale the way we have, and it actually gives us a lot of confidence as we look ahead. And by the way, a lot of these experts, we have 96% retention. They want to be on our platform. They're sitting on our data and AI capabilities. And our customer growth is growing far rapidly than the experts that we need, because the experts are a lot more productive, even in year over year, versus where we were 3 years ago. So we are very focused on demand. We have no concerns about margin just because of our data and AI investments. And so maybe with that, first of all, let me bring this to a close. I want to thank our team for, many of you started out by thanking us for the experience that you've had. And that experience has nothing to do with Sandeep and I standing up here. It's really, it's Kim, Jeff, our whole team, all the presenters that we're part of, putting together this experience for you all. So one, huge thanks to our team that's here and upstairs listening. Two, thank you for everybody virtually for taking the time to tie in. I think this will be the official close of Investor Day.